Good evening, guys. My name is Henry Gamble with SimplerOptions.com, and in tonight's free video I wanted to pick up kind of where we left off last week, talking about dividends. The current example I'm going to take a look at is Costco, but before we really dive down into that one, let's take a look at two others because I think they're very similar in relation to what I was looking for, or what we're going to be looking for tomorrow when Costco pays its dividend. So with GMCR, we talked about this one last week, where when you had that initial announcement, it's going to drive the stock lower because of course the dividend's paid out. Now there's no guarantee that the stock will move lower. There is a guarantee that the payout will be taken out of the price of the shares, but essentially, of course, after that's done, there's still an open market, and if the stock starts to get purchased again, well, then that can absolutely make up for the payout. So with that in mind, that's why we're not getting out of, there's a position that we've been tracking in our portfolio where we're still long Costco, and you might say, well, if you know it's going to drop, why aren't you getting out of those long calls? And that comes back to the point, kind of like this, where if you're trying to time it, where you're getting out perfectly on the advance and then buying it back on weakness, it can just be a little bit tricky. But worked out okay with GMCR, and then the other example that I wanted to show was KO, where this is one where we've had two different sets of exposure. We've taken a position in some shorter term contracts and some long term ones. The short term ones were exactly the same thing. We're on that dividend payout. We came in and bought directional calls because you're able to get them a little bit cheaper off of that drop. All the while you have a squeeze and consolidation near the highs, which bodes well for a continued push higher. So after looking at those two previous examples and then coming over and taking a look at Costco, it's the same situation. So I love the way that we had a nice advance today on better than average volume. We've got a squeeze in play, and not only is the squeeze there on the daily charts, but also a really solid pattern on the weekly. So I'm going to hold the longer dated October positions that we have here. Those still look fine. If this stock drops tomorrow, you can look to sell the 116 put credit spread and take advantage of what should be some leftover implied volatility. Alternately, if you want to be more aggressive, you can pick up some call options and do the same thing, looking for a move into the 1272 extension, which based off of this most recent swing high to low is going to take us into about $120. So I hope that helps, and we'll see you guys at the next free video.